I recently made significant profits on an Ethereum trade, and in this video I'm breaking it all down for you, sharing every detail with complete transparency so you can learn how to navigate the markets yourself and truly excel in your trading journey. This is a new series of videos and will be some of the most important in the channel as they take the concepts you've learnt in the How to Trade series and show you how they are put into motion in order to execute trades successfully. Today we're looking at an Ethereum short position taken on the 24th of August 2024. This is an example of a top tier setup, and studying these is one of the most efficient means of thriving in the markets, as once you understand the level of criteria you are looking for to enter a position, you can then solely focus on these and sift out any other potentially subpar positions that you previously may have taken. So let's get into it. First and most importantly, when conducting analysis on the markets, we have to ascertain the strength of price and the current trend. Here we can see that price is still technically in a downtrend. We are in a period of slight ascent in price, yes, but the price action that led us into this area is a clear and aggressive move to the downside. Knowing this, our mind should be geared towards being positioned on the short side, as we know we have higher odds of executing a winning position if we're playing with the trend. You can of course take trends that are counter trend, but those that have watched my educational series would know that I prefer you to first get a good grasp of how to read the trend, and then do your best to focus your efforts pro-trend as opposed to counter-trend. Now, let's look at the context of the situation. On the price action front, we have an hourly bullish divergence at the lows, created after a fast and inefficient move. In doing so, we created a large cluster of negative delta and liquidations. Negative delta means that market selling is occurring into limit bids that are absorbing the selling impetus. Delta theory states that the stronger hand, so to speak, in the markets operates in limit form. So when we see high negative delta, it means the stronger hand is stepping in to support price with limit bids, indicating a move to the upside. And vice versa, when we see positive delta, it means the stronger hand is stepping in to suppress price with limit asks, indicating a move to the downside. If this sounds unfamiliar to you, you may not have watched the Delta video on this channel yet. Feel free to do so above. With this in hand, we expect price to move up into this pocket of interest supply. It does, and in doing so, produces some notable pro-trend delta. Remember, the trend is still down, as it was a down move that led to this area of price action. So we're looking for positive delta to ride this to the short side. That being said, we don't really have anything present at all in terms of liquidations. From the point at which price taps into the supply zone, it's now considered weakened supply, as it's had its first tap into the zone. Price then consolidates under supply and taps into the zone again and again, until it breaks past the zone completely at this point here. It takes out the high of supply, which could be our short trigger, but taking a look at the delta, there isn't much significant to work with. Remember, we treat the delta page as our green light, and it's not quite giving us that signal. Price then ranges for some time, and now that all of this price action has passed, we now have a new technical target to work with in terms of our short position, this newly formed high. So we mark out our level here, looking for this level to be taken out and give us a nice trigger to enter. After ranging for 9 days, we get the move we wanted. What we see as price does so is the production of positive delta and a good amount of liquidations. The delta isn't immediately produced at the sweep candle itself, but it is local enough to be considered as part of the trade. This is where I took my entry. My stop loss placement gave the trade room for a little bit more to the upside, but I was confident in the playout as we've now taken out a key level, trading with the trend and with the order flow on our side. Target-wise, I wanted to keep this trade fluid and exit based off signals in the market as opposed to predetermining the exit in advance. What happens next is price carries on upwards, and the next day comes very close to stopping out the trade, but we managed to survive. A great example of why you should place your stop responsibly and not try to tighten up things too much. As price comes up, however, we start getting even more signals that price is topping out. First off, we have a triple humped divergence on the awesome oscillator. If you remember from the divergences video, this is a rare and unique signal that the AO can present us with and a great sign of reversal in the markets. A move over to the 2-hour time frame and we can see that we have a clean double divergence across both the RSI and the AO. Moving over to the delta and we can see that we put in another bar of positive delta that's slightly larger than the last. So although our position is being challenged, we are even more confident that it will play out if we can survive this squeeze. And we did in fact survive as price starts moving away from the divergence. The trade is now in a decent spot and our job from here is to monitor price and see if we're given any reason to close the position or to let it ride. The first area our eyes are drawn to are these lows. As you can see, we have 3 clear unswept targets that we believe price is likely to take out. As price starts moving down, we tighten up our stop, placing it at the highs that challenged our position previously, aware that the divergences should now also be in effect and should help in driving this to the downside. We are now in position and simply observing. Many traders tend to mess up at this point in the trade, and something I've been a large advocate of is to let the trade breathe. This is important at entry, when underwater as we have been, and as the trade begins to play out. If you've truly waited for a top tier setup, the play out should be significant. So a word to new traders watching this content, take a step away once in position and simply give it some room to play out. And as we can see from here, price does progress, it picks up in momentum, resulting in a sharp and aggressive takeout of these levels. Although I was initially thinking of taking this trade lower, I'm now aware that we've had a very fast move to the downside and taken out some key lows. So the best thing to do in this case is take a look at the delta. And as we can see, we produced a large bar of negative delta here. And although this is to be considered as counter trend delta, looking at the higher time frames, it is still significant. This, in combination with the speed of the move, allowed us to move out of the position comfortably, knowing we've been given ample signals to do so and made nice returns in a relatively short period of time. Here's what the trade looked like in motion. A clean trade utilizing the trend, the delta, and our understanding of sweeps, with following divergences to bolster the trade and give us the confidence to hold with conviction. I hope this video helped some of you understand the way in which I approach the markets. Stay tuned for the next.